You're clicking this because you're tired of paying almost $700 a year for a heavy metal card that feels far more like a restricted coupon book than an actual wealth-building tool. What if I told you the single most powerful asset for digital nomads and modern investors right now charges you absolute zero? We're talking zero annual fees, yet it still packs the heavy-hitting travel perks, the robust multipliers, and the premium transferable currencies of the banking giants. Let's get into it. For years, the legacy financial industry convinced you that to play the luxury travel game, you must pay a massive toll. The major banking players built empires on huge annual fees, trapping you in a vicious cycle of forced spending just to break even on statement credits. But the landscape has shifted in 2026. The smart money migrates away from bloated products toward lean, optimized financial setups that protect your downside without bleeding your capital dry. Today, we're going to break down the exact mechanics of how a $0 challenger outperforms the heavyweights. We'll expose the hidden wealth leaks of premium cards, dive deep into the anatomy of the ultimate free alternative, run a vivid real-world thought experiment on leveraging points, and show you how to optimize your global spending without sacrificing an ounce of luxury. By the time we finish, you'll understand why paying for prestige is a tax on the financially unaware. Banks have disguised luxury consumption as a smart financial investment. It's not. It's an advance fee on your own lifestyle. Let's tear down the illusion of the premium credit card. The industry heavyweights charge anywhere from $400 to nearly $700 a year. They justify this steep price tag by dangling a web of fragmented statement credits for specific food delivery apps, overpriced gyms, or incidental airline fees. This business model relies on a concept called breakage. Breakage is the psychological trap where you simply forget or fail to use the credits, meaning the bank pockets your upfront fee as pure profit. You prepay your fee, and all of a sudden, you're in debt to your own wallet, forced to spend money you never intended to spend, just to justify holding the card. Imagine making $100,000 a year living tax-free in Dubai. You're optimizing every single dollar for compound growth. You've streamlined your expenses and maximized your savings rate. Why would you choose to hand over $700 a year to a bank just for the privilege of accessing a crowded airport lounge you visit maybe 3 or 4 times a year? That makes zero mathematical sense. If you deploy that same $700 a year into a decentralized finance liquidity pool, which is a smart contract where you lend your assets to facilitate trading and earn fees in return, or if you put it into a real estate investment trust that pays a steady dividend, you build actual wealth. You buy cash flow. Premium cards do the exact opposite. They force you to prepay for consumption. The modern investor demands yield, not forced spending. Enter the zero-fee disruptors. But one specific card rewrites the rules of the game, leaving the legacy giants scrambling. We're talking about the Wells Fargo Autograph. It's a $0 annual fee card that punches well above its weight class. In the past, traditional zero-fee cards only gave you flat cashback, which offers terrible value for international travel, or they charged you exorbitant fees the second you crossed a border. The Autograph, however, earns 3 times the points on a massive variety of lifestyle categories: travel, dining, transit, gas, and streaming services. But here is the massive differentiator that shatters the old paradigm. It has no foreign transaction fees and grants direct access to premium transfer partners. Let's break down why that changes everything. A foreign transaction fee is a hidden tax, often around 3%, that banks slap on every purchase you make in a different currency. If you spend $50,000 abroad over a year, a 3% fee means $1,500 just vanished from your net worth. The Autograph eliminates that wealth leak. Furthermore, in the past, you needed to hold a premium, fee-bearing card to transfer your points to airline loyalty programs. Now, for $0, you can transfer your points one-to-one to partners like Air France KLM Flying Blue, British Airways, and the newly added Cathay Pacific Asia Miles. You get the aggressive earning multipliers of a mid-tier gold card and the international utility of a reserve card, all without paying a single dime in annual fees. Let's translate those multipliers and transfer partners into tangible, real-world leverage. Earning points is irrelevant if you can't deploy them efficiently. The secret to wealth optimization is finding asymmetric upside, where a small, routine action yields a massive reward. This is where the concept of point arbitrage comes in. Arbitrage, in this context, means earning points in a fixed banking system, but redeeming them in an airline system where the cash price of a ticket fluctuates based on demand. Imagine you're a digital nomad spending $4,000 a month exploring Europe. You're paying for boutique apartments in Lisbon, high-speed trains across Italy, and incredible dinners in Barcelona. Put that entire spend on this zero-fee card. Because travel, transit, and dining all earn 3 times the points, you generate 12,000 points a month. Over a mere 6 months, you've accumulated 72,000 points. Now, if you redeem those points for cashback, you'd get maybe $720. But the modern investor doesn't settle for baseline value. Instead, you transfer those 72,000 points one-to-one to Air France KLM. Those exact points can book you a lie-flat business class ticket back to the United States. A ticket that would cost you upwards of $4,000 in cash. You've engineered a luxury asset entirely from your unavoidable baseline living expenses, all while dodging the foreign transaction tax that lesser cards would have charged you. You transformed your everyday transit and dining into high-yield travel capital. But points are only half the equation. The real reason this card beats the giants is the hidden safety net. Premium giants boast about their travel insurance to justify their exorbitant fees, but an optimized financial strategy relies on targeted coverage that protects your most vulnerable assets. The Autograph card includes robust cellular telephone protection, granting you up to $600 of coverage against damage or theft, subject to a small deductible, just by paying your monthly phone bill with the card. Think about that for a second. Our smartphones are the command centers for our businesses, our crypto wallets, and our daily lives. How many people pay $15 to $20 a month for carrier insurance? That's another $200 a year saved. Furthermore, the card acts as a Visa signature product, granting you secondary auto rental collision, damage waiver, and travel emergency services. When you factor in the money saved on phone insurance, the lack of an annual fee, and the zero foreign transaction fees, you get the vital risk mitigation of a $500 card without the annual wealth drain. You insulate your lifestyle against unexpected shocks, keeping your overhead lean and retaining full control over your liquidity. Let's bring this all back to the core philosophy of wealth building. The greatest hidden cost of a premium credit card isn't the fee itself, but what that fee could have become if you invested it. This is the opportunity cost of capital. Every dollar you spend on a credit card annual fee is a dollar that can't compound in the market. Let's say you drop $695 a year on a metal status symbol. Over a decade, that is nearly $7,000 in pure fees. But if you took that same $695 every year and invested it into a broad market index fund yielding an average of 8%, that capital would grow to over $10,000. By choosing a powerful zero-fee card, you aren't just saving money, you're redirecting your capital back into assets that pay you. You replace a depreciating liability with an appreciating asset. It aligns with the philosophy of the modern investor. Keep your structural overhead as close to zero as possible, maximize your yield on everyday spend, and protect your downside. You don't need a heavy metal card to prove you've made it. You just need a mathematical edge. The era of blind brand loyalty and paying premium fees just for the perceived status of a heavy metal card is over. The smart money leans into lean setups that protect your downside while delivering massive upside through strategic transfer partners and zero fees. But swapping out your primary daily driver is just the first step in auditing your financial stack. If you're still holding on to legacy cards that drain your wealth through hidden fees, you need to see exactly which premium options pass the math test. I tore apart the fine print of the top-tier contenders to find the absolute best. Click the video on your screen right now titled, "I reviewed 50 premium credit cards. Here are the only 3 you need to finalize your perfect wallet setup."